Hey everybody. Happy Wednesday. We've got the CPI data coming out tomorrow. Let me go into the charts and hopefully everyone's able to broadcast this or stream in from YouTube, from Facebook, from X or Twitter, and some other platforms as well. So adding this to the schedule where my Mondays and Fridays, usually 9:30 a.m. Eastern time, I'm switching the schedule in 2024. So I'll be live at 9 a.m. Mondays and Fridays on my YouTube channel and all the other streaming. And then Wednesdays popping into Restream and just pushing it out the same way, just doing a midweek market minute so we can check in, see how things are going. Let me bring up the chat, and I have my Discord up running as well. So people tuning in, we are live now for the midweek market minute. There we go. And a couple things to talk about today and this week so far in the trading rooms. Some ownership on some stocks, Under Armour looking for these, 2020 COVID lows to offer some opportunities to buy extremely low. Talked about this one this morning with JetBlue and added in some staggered credit spreads. This one actually, I'm looking at ownership. I think I own the stock around like $7. Trade some options around it. We put in some credit spreads, the 550 by fives and the 5 by fours. We're trying to get filled basically at 2008 levels. I looked at the airline stocks. This one kind of reminded me of what we did over the last couple of years. We played some consumer discretionary stocks with casinos. So WYNN, we ended up taking a nice double bottom trade here. We had about 6 trades running on win with credit spreads, all provided profit. Las Vegas Sands, LVS, same type of thing, just buying extremely low. Really nice test of this 2020 low. Got in some credit spreads, another 3, 4, 5 trades for profit. So I'm looking to see across the airline industry. Here's LUV off these recent COVID lows. Nice little pop there from 23 up to 29. But then took a look at Delta, DAL, and Delta's trading up to 42. COVID lows back down here at $20. We're well off those lows. So I look at something like Delta, could be range bound where we kind of top out and maybe hit heavy resistance at 50. If we come back into the $30 level or lower, I do have some interest in Delta Airlines as far as some option trades. From then we get into some of the other hospitality tourism stocks, which involve some cruise lines. Here's CCL, Carnival Cruise Lines. We had a nice run where we had some credit spreads, call options, and ownership in the tens and $11. Ran all the way up towards $20, closed out some profit, which was a really nice gain in 2023. If we come back and settle back into these lows at $10 or $11 or lower, certainly interested in getting in again on CCL. NCLH, same thing. 1752's current price. If we settle back into the $12, $11 area, very interested in getting some credit spreads, some option trades, long call, stuff like that. Energy, let's switch sectors a little bit. MRO is a stock that I looked at this week in the trading rooms. We ended up getting assigned. So in my equities on demand trading room, we had an assignment that came with a credit spread. We just took a small loss on it. We ended up losing like 49 cents. Let me double check something. So MRO just updated it today. 1216, that was already done. Go back to these 11. There we go. So this one, the 27 by 26 credit spread got filled for 51 cents, closed it out today, took a loss of 49 cents. It's no big deal. So same as the original risk on the trade. But overall, I'm looking at something like this. We put in some trades this week on GLD and USO. If MRO, for example, comes back into these same lows, pretty interested in looking for a bounce. Credit spreads would be somewhere between like $22 and $21. We're trading in just shy of 23 right now. I just think this has good range potential. So if we can hit these lows, build some trades off these levels, resistance up here, but that's a 50+% upside. So what I talked about, today, this week, I'm looking for, some good gain opportunities, good upside potential. Anything I can spot in the stock market that offers a pretty reasonable 50+% move, I'm interested in trading it. So this is one of those stocks where if we have some support here at 2150, goes back up to 32 and change, that's a 50+% move. Some other ones, silver, which I would be trading SLV. I do like silver in the bigger picture. Let me see here. This chart's a little bit noisy, so let me get into something slightly cleaner. XAG, trading at 22.93. This is the bigger picture on the daily and weekly chart. Let's go to the weekly. I already had this one measured out to projected symmetry, so it'd be a trade like this. I am in silver, and this low to this high, I'm projecting a move up here towards $35 or $36. If we have a 5-wave move on top of that, so we would have wave 1, 2, we're looking for a wave 3 push, pullback wave 4, and then a finish wave 5. I would love in the next maybe 2 to 3 to 5 years, if it takes that long, to have silver up here towards $45 for a big profit level. I own silver at around 20 bucks. So could I make 250% gain on silver? Yeah, it's possible. Split that over, let's say it takes 3 years. 250% over 3 years is still a pretty good annualized gain. So I like that trade. Copper was another one looked at today. Should be HG, copper futures. Trading at 378. This is another one going back to this recent swing, this low, this high. I'd like to see if we can just kind of stall in here a little bit. Maybe some indecision, maybe some structure we can build off of, structure we get positioned for, then looking for a breakout for copper to head up towards $5 or $6. Um, Copper tends to do pretty well in expansionary phases, which I don't necessarily think we're going to be in. But if we have material shortages and supply issues in any way, shape, or form, I think copper has some upside potential. But I'd like to at least establish some floor positions here in the low threes. Another one is uranium. We had some news on this yesterday with some miners. We're back up here. Bought the stock at 26.95. It's up just about $2.30 for us. We also have some credit spreads, and again projecting some bigger moves on this play all the way up into the $55 level. We get that there's 3 levels, so this would be my first big swing right here. And correction, we're looking for a breakout to fill the symmetry around $40. That's going to be just shy of 100% upside. We pull back again, resistance becomes support, have another move up here. That's $50+, good upside potential. If this thing gets ridiculously, you know, meme-ish, I should say, perhaps this is an 80, 90, $100 stock at some point. Just a lot of supply and demand issues with what producers are doing, what the needs are for energy, and yeah, uranium's a pretty interesting play. So just I own the shares. I'm doing some credit spreads, doing some options, some long calls, but also have some protection on the downside because it's probably going to be volatile. Today was supposed to be the day that we had Bitcoin ETFs being approved. This is what I was finding, and interesting development here. None of these symbols outside of GBTC, none of these symbols pop up on TradingView. So I don't think there's anything available yet. I think that right now we're just gonna have to wait and see. The symbols that I'm in, and traders that follow me know this, I'm in GBTC MARA, which is a mining company for Bitcoin, and also BITO, which is a ProShares version right here. So I do have some exposure through stocks and options accounts, BITO, GBTC. With BITO, I can trade options. With GBTC, I cannot. The one thing I'm watching on all of my Bitcoin related instruments right now, let's just go to Bitcoin actually, is if we get a pullback. So we're trading at $45,400. If we have a pullback towards the yearly pivot, that's another spot that I look to add to my positions. So just from an overall movement, overbought conditions with divergence on the daily time frame, I'd love a pullback here towards $36 or $37. Let me see the mining journal. Oh, fudge. BTC mining. I've got a website in here. Let me see if I can find it in a bookmark. All bookmarks, top stocks, macro. Let's see if I can find this. Bitcoin mining costs. That's what I'm looking for. Just a little search. There we go. So current mining costs, if I zoom in here, I am looking at Bitcoin dollars trading at 45,466, and the mining cost right now is spiked up here towards, wow, what? The average mining cost just jumped in a big way towards $60,000. So look, I'm not saying this has to happen, will happen. But what is interesting is, look at the blue spikes that we've seen. And, obviously mining costs go up and go down. So spikes up here, comes back down, spikes up here, comes back down. But as this is happening, one thing you can notice is the trend of Bitcoin has been going up since October of 2022, right? Or actually, this would be October 2023. I zoomed in pretty close. So trends to the upside. I would like to see a pullback. Mining costs are going to be pretty volatile, but we're going to see if the spot price continues to head up that way, or if it's just a big spike in mining and comes back down towards reasonable levels at 45, which is pretty much where we're trading right now. So maybe it's wishful thinking for me to get a pullback towards 35,000, but we've seen fluctuations where sometimes our mining costs might stay about 20% or so above current price, so we could see a pullback. Let me do 20% of 45,000. So 20% at 45,000, 9 grand under that. So that puts it right at $36,000. So again, I like the levels and certainly like the technicals. Big pocket here in the breakout above 30. So anything in the 35 to $30,000 zone, really interested in having some Bitcoins go long. Let me see if I can jump in on YouTube and see how many people are tuning in. Usually Mondays and Fridays, we have 50 plus watchers live, a lot of people watching after the fact. So let's see what's going on. Right, hear me. All right. Chris is here, Trish is here, Jan's here, Ruth Ann's here, and Jose is here. Nice to see everybody. See you for the new Wednesday sessions. Okay. And off we go. So that covers most of what I wanted to get after with stocks and options and crypto. USO put in some positions here. We don't have any trades running right now. We're looking at some orders. I think we did the 62 by 60. And then I'll wrap up here on the stocks and options side. We'll go into some currencies here in just a moment. So added some new trades this week in equities on demand. USO, the 60 by 59. So I'm looking at kind of bottom, really bottom fishing on USO. If I was to establish positions here, I'm going after, these major lows right here. So 60 by 59, if we get filled there for 50 cents, awesome. Range lows to range highs, I'm looking for oil to do something like that. So if we have, this structure still waiting and still lingering and still the overall global slowdown, if China remains quiet, we're going to get some big data tomorrow to break things loose one way or the other. So we'll see where the stock market ultimately goes for this week. But yeah, USO trying to get some levels to buy nice and low. And two things: if I can buy it low and we pop back up here for a gain, awesome. If we come back up to $95 or so, in this case, USO is around $85. That'd be equivalent of US oil. Okay, US oil at $95. I'm looking to sell oil. So I think oil is more range bound after we had, crazy crash during COVID, crazy recovery here. Russia Ukraine invasion, Middle East conflict. We're not talking about oil at $200 a barrel. We're talking about with a lack of demand, increased supply, and therefore we've seen another run up to the yearly pivot, fade back down. We're getting right back into settling towards these levels. But I think 65 to $70 remains pretty strong support. Inflation data, remember, if you're looking at inflation, the stuff that remains sticky is still food, energy, and shelter. And the Fed doesn't like to talk about that because they're looking for numbers to improve and to have deflationary mechanisms in place with a lot of different inputs. But those are the three things that remain pretty expensive that everybody kind of feels and sees on a day-to-day basis. All right, let's get into some currencies. So we did some yearly pivot discussions this week in the Flex trading room. I still like all the Swiss pairs. This one's pretty nice. Aussie Swiss is a great setup. I think I talked on Monday of the Euro Swiss. Euro Swiss I like a lot from the technical side on a monthly time frame, oversold conditions with divergence. We have a nice bar count here in the daily time frame with the Aussie Swiss. And one thing I would look for is this. Check this out on the zoomed out. So if I zoom out, get a little bit more real estate here on the chart, we have a big demand zone down here, plus our flash crash low from 2020. If this market, doesn't hold this support level and we had a little bit lower, I'm looking for a bullish pattern to emerge and then a 5-wave move to the upside. So we have a lot of demand up here. We have pivots galore. Come back and find that 200 EMA. And even if it's this, even if all we see is price hold and get back above the 200 EMA, I'm looking for this to go from a sell zone into a buy zone. And from there, look at some wave structure and try to pull back. So my bigger range is flash crash low to this high, establishing another bottom over here, and then come back up to resistance at 72. So if we're talking about trading Aussie Swiss between 5,400 or even right now 57 to 5,400 is a 300 pip area. I would happily buy in at 57, buy in at 55.50, buy in at 54, establish 3 positions here, and look for a lot of upside. It's going to take time, but we get some positive swap on this. Everything that happens this year with central banks is going to be something we want to keep an eye on. Herschel's here, Williams here. You are a okay. So Herschel, I mean, you got to let me know what you're doing, man. I mean, if it's just a credit spread, um, keep it going, right? Like we want the credit spread to be full profit, so let it expire. If you're talking long call, then I mean, long call. If you're in a long call, remember time doesn't work in your favor. So if price is up, um, don't let that time waterfall work against you. So if you're up a decent chunk of profit, I mean, anytime I've got call options and I'm up, 100%, 200%, I typically look to take some profit. It lowers the cost basis. So if you're long an option, and directions going your way, close out sooner than later. If you're using sell options or using credit spreads, time works in your favor. So if it looks good, I prefer full profit or take it all the way to expiration. The exception would be if we're up a decent chunk and early on you could get 85 to 90% of the profit, and you can close out 30 days early or 60 days early. That's great. And I know we do that with some of our staggered credit spreads. So just trying to help out Herschel there. All right, Aussie Swiss I like a lot. Euro Swiss we talked about on Monday. It's one of my favorite setups right now for the year. Dollar Swiss I'm also long in. So basically this, I'll show you what I'm giving the flex traders out there. Let me go to the message here. So these are some of the directions in the trading room. These are all the active positions that I am in. Aussie CAD, Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand CAD, New Zealand Swiss, Dollar Swiss. I'm long on all of these. So current positions running on all of these. The trades we talked about today that I liked, but I'll be keeping a close eye in the next couple of weeks on Pound Aussie, Pound New Zealand. Also, the dollar CAD, I closed out a trade for 185 pips. Let me go to the dollar CAD right now. Dollar CAD trading at 33.82, just away from that. The yearly pivot was tapped here. I should have taken profit around that yearly pivot, which would have given me. I bought in at 32. That would have been a 212 pip trade. Ended up closing out for 185 on a bit of a pullback. So no big deal. But the positions I'm liking on dollar CAD would be if we come back to 32, come back to 31, come back to 1.30, again, establishing this position of support, buying it nice and low, and then letting this thing rip back up towards range highs. So if we can get that trade, if it has some interim resistance here at the yearly pivot, come back down, retest 32, 32, 31, 3,000, buying low, slingshot back up here. Midpoint is somewhere between 35 and 36. Heavy resistance outside of this wick high at 4,000. We're talking 3,900. So could I buy low? Yeah. And this would be a trade I want this to be something I can add to. I want to find some good support. I want to put in some buy stop levels and then add to this position to the upside. So dollar CAD's looking pretty clean. Here's the pound Aussie. Pound Aussie, I'm looking for this. So pound Aussie is up right now. And what I'm going to watch for is, so this move off the yearly pivot coming all the way back up here to this interim resistance. If we establish a bit of a neckline or head and shoulders, I like this pattern. So I'd be looking to get long above the head and shoulders, take this trade back up to highs, or measure that move out to higher highs. But this is, low to high, higher low to higher high. If we have another correction, we have another bull pattern, then I would just measure this out for a fifth wave move. So let me see something really quickly here. Let's go pound Aussie and pound New Zealand. Pound Aussie, pound New Zealand. If I jump into the higher time frame, here we go. So let me take a smart wave tool and plot it from this low. That's why I'm looking long right there. So if this wave structure comes to fruition, low, high, higher low, higher high. We pull back, establishing that wave 4. I'm looking to see if we can continue up to wave 5, which should put us back up towards these highs, 204 to 205. And again, if I'm establishing positions here around 194, 195, that's a nice little 1,000 pip upside potential trade. I mean, I would take that as a swing. A couple ways we could do that would be establish a position here, right? Little consolidation. We can put buy stops on a breakout. We can take a stab at a swing trade where we buy in, on the right shoulder, stop loss below the low, and then we break out, stack up a couple of orders, eliminate risk along the way, take out this high, make a fresh high, get to these highs here. Pound Aussie, pound New Zealand should both look pretty similar as far as that trade and and long opportunity. So pound New Zealand right here. Pound New Zealand, if I put in the smart wave right here as well, boom, same type of thing. So pulling back to wave 4. Let me see if this changes the move. Yeah. So about the same. Pound Aussie, here's pound New Zealand. Similar structure, right? So off the yearly pivot, we work our way back up to this level, pull back for a pattern. If it's a crown, great. If it's a head and shoulders, fine. But looking to get long and stay long. Poke the highs, break the highs, eliminate risk, trail the stop losses. There's plenty of space up here towards 2.20, 2.22, and I believe that comes back into those COVID highs. If we look back, yep. So that big ridiculous flash crash high in 2020 was all the way up here towards like 2.17. So we'll see. Pound Aussie actually looks a little bit better in my opinion, but I think they'll trade in a similar fashion. So this low, this high, wave 1, pull back wave 2, push wave 3. This is kind of the corrective wave 4 that I've been waiting for. So push, pause, establish position, swing trade, going after fresh highs. Pound Aussie, pound New Zealand make the cut. Pretty good graded trade. Okay, thanks, William. I appreciate that, man. Any other charts? Any other setups you like to take a look at? Again, these sessions will fill up. Like I said, Mondays and Fridays have done pretty well. 300 to 400 watchers every week, which is awesome. And yeah, we'll just keep growing the channel. But I want to add this in for 2024. We can spot check through the week and just do a quick 20, 30-minute session. And like I said, tomorrow is big data for the markets. Let's go into this week. So we're watching for CPI data out of the U.S. tomorrow morning. It is right here. So a couple of news events, right? Unemployment claims, something to watch for the firmer, hotter, or softer labor market. CPI data came 3.1 was the previous year over year, forecasted for 3.2. Month over month CPI and core CPI, we're going to watch those as well to see if they print green or red. So again, this is just my opinion. I think that if the market, if this is a big improvement where inflation prints, let's say under 3% for the year over year, I think that might let the market rip pretty aggressively and maybe retest the highs. The Dow Jones broke all-time highs. The Qs tapped all-time highs. The SPY has not reached those all-time highs yet. It's just shy of those. So I think it's something to get the market a little bit optimistic and excited would be, seeing inflation data continue to trend lower. What would make the market a little bit busted up and maybe lose some of that optimism and fade a little bit of that Santa rally would be, we print higher, but maybe, 3.3, 3.4, and it's a miss to the upside, right? Where all of a sudden it's like, oh boy, what's this mean? What is increasing? Is it food energy? Is it food energy shelter? What sectors are showing higher inflation? So I think under 3 is a good print. The market probably rips higher. But if that's not the case, we'll watch. But I do have positions ready for the indexes traded this week on the SPY. Expirations are out to next week, so I'm giving it a little bit extra time. And that was because the print is on Thursday, so I don't want to just live and die by one news event and let it expire Friday. So we're getting close. I mean, right here for the week, it's like we're back up towards these holiday highs. If there's enough momentum to carry us into the all-time highs in the SPY, great. We can probably turn that little strangle that we did into we paid 340 for it. Maybe we can close this out for 540 or better. I've got a 475. So if we tap the highs at 480, we should be able to get $5 of credit there, which gives me $1.60 of profit. So I thought the trades are pretty reasonable to go out to next Friday and see the market either tap the highs again. What would be kind of nice would be if we tap these all-time highs at 480, grab a few bucks out of the SPY. If we tap Some fresh highs on the Qs at 412. We have a 406. I mean, that'd be $5 and change, which means this closes out for, $5 and change. So, maybe making a dollar plus on the Qs. And then the IWM was another one where if we get back to the holiday highs, great. If something's disappointing, I feel like the IWM is more volatile and it probably rips back down into, maybe 180 or low 180s. So we got the 181 by 175, and we're going to see how this plays out. Actually, that's incorrect. That is a trade that's already done for profit. We were good on that one. Let me establish this one on the chart. I didn't draw this one out. So IWM is a strangle, and we're at the 199 by 191. That's what it is. So the 199. Long strangle. So a 119 expiration. Okay. So a recent high is 205, and that would be $6, and we paid like $2 for this one. So $3 or $4 of credit would be pretty sweet. Okay. Trisha, see the euro yen, Aussie yen, sure. I looked at these, for the week. I'm not a huge fan of the yen because I just don't think it's going to cooperate. Currency strength today was just very weak for the yen. Euro's got a nice little rise here later in the morning, but euro on top, yen on the bottom. I just don't like seeing. Look, I don't know what everyone's plan is on the euro on the yen crosses. I feel like I keep looking at sentiment, and majority of retail traders are still short the yen. And that tells me that there's probably more pain ahead because there's not any confirmation to sell. So dollar yen, you can see here that I think when I talked about this early in the week, it was like 65.35, and now it's 69.31. So the shorts are starting to grow a little bit. The pound yen excessively short, 83 to 17. The euro yen excessively short, 77 to 23. The Aussie yen, 73 to 27. I just think with a carry trade environment, unless this structure breaks right here, unless that trend line breaks, I'm not shorting the Aussie yen. I would want to see, confirmation, and not just a chart alarm, not just a trend line break. I'd want to see price do this: break, pause, and even, not even take the first initial break, but put in like a sell stop and see if this pushes lower. The one thing we keep seeing is like it spikes down and then it goes back, and it spikes down and it goes back, and it spikes down and it goes back, and it spikes down and it goes back. So what gets really frustrating is, seeing some clean structure like this, right? And then what the market does is it spikes, traders get filled on sell trades, and then the market rips right back up and they get stopped out. So I would almost be willing to say, you know what? Let's wait for price to break and then wait for price to pull back and then put in a sell stop right here. And that way, let price prove it. If price is going to go lower and go lower and go lower, I mean, the technicals look great. Problem is, they're just not cooperating. So I want to see nice, clean trades on the yen crosses, and I just don't see the confirmation yet. So that's my Aussie yen. Euro yen, possibly a crown pattern. And I say possibly, but I put a chart alarm right here on the daily chart. So I say crown pattern because we have this low, left tip, center tip. If we're just pulling back a little bit with a channel, that's totally fine. Again, want to see confirmation on the right-hand side of the trend line. We don't have it yet. So I don't like selling it, just guessing, I don't like selling it. So I'll wait. If we confirm, I'll sell. And not just a spike, not just one break. I want to see it break, pull back, and then a stop sell that gets us in with price proving it's going to go lower. So across the board, that's pretty much how I'm looking at the yen pairs. And then today, pretty evident that the carry trade still in full swing. Japanese yen, Bank of Japan, not really doing anything to show the signs of Japanese yen strengthening. The one thing that was interesting, we looked at this today, is the Japanese 10-year. Japanese 10-year, from this spike in November, we had a bit of a correction, but again, I'm missing the correlations here with the Japanese yen. That's been the issue. Is this thing broke for the first time of all this manipulation. Breaks out and it actually weakened the yen, and then it breaks out again, and then the end of the year it strengthened the yen, and then this drops and it weakens the yen. So it's the correlation is this goes up, yen goes down. That's not really the case. This goes down, this goes up. Not really the case. It's just the yens are doing what they want. Therefore, I think the best way to trade it is keep your short-term alignments. If you're in a buy zone on a 1 hour, 4 hour chart, stay with a buy zone and scalp on the 15-minute chart. Stay in a buy zone and scalp on the 5-minute chart. There's good volatility. If I go into top.net, let me see if I can get my Forex volatility up here. So if we go to the 4-week average or the 20-day average, let's see where the yen pairs are at. So this is alphabetical, but we're getting 80 pips a day on the Aussie yen. Let's see euro yen, pound yen. Euro yen's 140 a day, pound yen's 170 a day. Your highest volatility currency pairs, if we organize this by pips, your pound yen, well, I mean, that's crazy. Swiss yen's at 145. I mean, the pound yen is by far your best scalping opportunity if you want to be a day trader. That's a lot of movement day to day. An active zone that maybe gives you these like 40 to 60 pip pushes, maybe 100 pip pushes. You got 170 pips a day on average. So one thing, it's expensive, it's volatile. Make sure you trade the right alignment, stick with your 1 hour or less. But it's good scalping opportunities when you've got day to day volatility. Euro yen's still pretty good. Dollar yen's decent. And then anything that's under 100, I would cut off my scalping here. I would even say, this. I'll just do this. I'll draw another line. So I'd say Euro New Zealand's. Euro New Zealand and up. This list would be if you're looking at day trading. I had somebody join my Discord group this week that was really adamant about asking about day trading and scalping and what do we do. This is one of my prerequisites for scalping. I want to see high volatility. To me, this is adequate. This isn't like extremely high volatility because euro dollar, for example, is trading 66.7 pips a day. That's medium to low. I'd even say low volatility, right? But if you can still get pound yen to be 170 a day, pound New Zealand's not too far back at 142. But yeah, I mean, if you really want to just follow, one, two, three currency pair, excuse me, three currency pairs, you get 139, 142, 170 pips a day. Traders can be pretty deadly there. Get some good alignments, be patient, follow some flow. But again, it's a grind. I just think having good volatility is worth it. Okay. So anyway, just thought that was interesting. We're in a different environment right now, and the yens, a few of them are providing some scalping opportunities. Yen pairs as a whole are just it's a carry trade. So the yen is going to be the least incentivized trade to hold. JPY is likely not going to get stronger without either tons of manipulation or a policy shift and policy stance by the BOJ, which I said this all last year. I'm not going to wait around and hope that the BOJ decides to change rates. I don't think they're going to. If they're going to do it, now would seem to be a good time because we've got all these fluctuations in central banks. I mean, they raise rates like crazy. They're potentially cutting rates. So if there's a time to go to, 0% or positive, excuse me, positive interest rates, now seems to be the appropriate time as all these central banks are making these big moves. You know, so Trish, you good on those pairs? Euro yen, Aussie yen? Yep. Okay. All right. Any other questions or any thoughts? If you would do me a favor, hit the thumbs up button for me. Just like and subscribe, all the stuff you haven't joined live. Hopefully, it starts to catch wind and it'll pop up where more consistent on the YouTube feed, doing Mondays and Wednesdays and Fridays. Just different times, 9 a.m. on Mondays and Fridays. Wednesdays will be a midweek check at noon, and we'll go from there. And I'll build it around there. So I do have some other videos coming out the next week or so. I'll do another Trader's Path to 100%. Got some videos that I'm going to post on my Telegram channel, and that's it. Here to help as always. Happy trading, lots of profits. So good stuff. Thanks, Ruthann. Nice to see everybody just popping in here. And I'll see you back in the trading rooms tomorrow. All right. Take care. Bye.